Hey, what's up, y'all? This is TWE TV here, brought to you another YouTube video. Now, keep in mind, this is also going to be like a kind of like a recap, kind of give everyone A through Z. What am I looking for? How did I take the trades? What's going through my mind, before, after, and during each trade? And also kind of breaking down the numbers. I tend to notice in our Discord that we have at Solo Network is, all around, an entry point, not really on how to exit, not really on, risk management, how to break it down into numbers. So I figured let me, just break it down, give everyone an idea of how I do it, what's my mindset on it, and I hope everyone enjoys. So, kind of just to recap, so this is a Thursday of last week, and as you can see, we have a 15-minute zone that we marked out here. We got actually plenty of 15-minute zones, and even a couple transactions to technically we could have, caught a short to a certain degree, but at least in this case, I'm looking at it as okay, heavy volume, to the upside. That tells me there's a big imbalance, right? And another thing that I wanted to break down too is, okay, it's dropping to the downside. So what does that mean? That means that since it's dropping to the downside, we can look for transactions. Beautiful, right? Keep in mind, we have a demand here that is showing reaction, right? But it failed. So it created a midpoint. Let's not forget about the extreme, right? So there's always 2 points that are created from a transaction, midpoint and an extreme. Now, ideally, we should be looking for that exact same setup, right, on both sides of the market, right, to kind of, emphasize on where we can enter. And obviously, from a higher time frame perspective, we can also have a pretty good idea of which one would probably be most preferable to take. Now, in this case, I'm just testing the data, right? We got a reaction. So that's telling me, okay, we got an extreme right here. Beautiful. That works, right? Because midpoint was already taken. So it goes ahead and it's getting really close to tapping to the extreme. And, there we go. We had the liquidity taken out, and then it created some inducement last minute. I mean, that's relatively what you want to see, right? Because you could kind of look at it as, it's a line of people, and they just basically took that they took that little spot there, but then they want to induce more people to enter last minute, and that's when they sweep it. So usually they'll hedge, right? So that's kind of how it plays out. And we're gonna go ahead and look at that supply. Well, it reacts to it, but blows through it, and then it taps into that midpoint for the short. So right there we have a big possibility to take an entry if you really want to. I, in this case, relatively would rather stay away from this entire thing, but let's go ahead and take a look at it. So it creates another transaction, beautiful, which is also creating order flow on the sell side, the supplies up there. Now, with that being said, I'm ultimately looking for a longing point, right? That's ideally how I'm looking at it, because I'm thinking, okay, maybe we can just take a long here, and it's creating liquidity. This setup looks beautiful, right? So we go ahead and take our entry. Right now, I'm paying attention to midpoint as more of a, an exit. It's a pretty decent trade. I mean, how I also look at it is, this could all be just liquidity, because remember, okay, it takes this little transaction here, it tapped into that midpoint, but how I'm viewing it is there's a big possibility that it can pull into an extreme on the buy side, but it's also creating order flow here, right? So I'm kind of looking at that as liquidity all in itself, right? So that you can also consider that all as external liquidity, from a buy perspective, but an internal liquidity from a shorting or a selling perspective. So all in all, just from seeing order flow being created here, that's what kind of makes me a little skeptical on taking a trade right off of the buys, as it obviously reacted to that transaction, like that's where we got out, right, on that specific trade, right? But considering that we have some aggressive order flow of supply, and considering we have a transaction there, there's a good chance that the supplies are going to be in control here. And Lord and behold, it sweeps all of that. Exactly what I was kind of predicting was going to happen. Now we have a, short little supply here. We're looking for transaction. And as we can see, it's slowly playing through, right? So it kind of sweeps that extreme of the buys, right? And then the beautiful thing that we look at is like, okay, beautiful. We got a reaction. That's exactly what we want. Now, I'm viewing it as there's liquidity, right? External liquidity here, right? That we should be possibly targeting this 15-minute area, right? That 15-minute POI. But if you want to go crazy, you could aim for that 1-minute extreme, which is perfectly okay. Whichever you want to do, whichever you feel more comfortable with. Me, I'm trying to stay on the safe side here and, be very proactive and be very vigilant on the possibility of the market turning on me. So in this section here, I'm looking at it's like, okay, we have a reaction. Beautiful. I would be more comfortable for it to sweep, which that's what it ends up doing. Sweeps it very little, but after it sweeps it, now it's creating less resistance for sellers. I guess that'll probably be the best way of saying it. Then it creates a little bit more liquidity, taps into our 1-minute zone, and there we go. We got another buy entry. And I always tell people, take as many partials as possible. Like I said before, it really depends. If you want to go for 15-minute, 1 minute, either way, it is a genuine good entry. Also fits our entry model, which is the biggest thing. You have to develop multiple entry models. So let's kind of break all this down. So, we have 15 minutes, but we see liquidity being created through order flow, while it's then, obviously shows a reaction to the final piece of the order flow, right? Then it sweeps it, right? So ideally, you could look at it as it's creating less resistance for the sellers in this case, right? Because ultimately we're trying to long here. So if we have less resistance on the sellers by sweeping it, right? Because a lot of the time on that reaction, there's going to be a lot of people that are shorting the market here. Well, a lot of the time, they're probably going to move their stop loss, or maybe that's relatively where their stop losses are, sitting at. So that's where it just wicks it, stops them out. And then after that, it can safely pull down into an extreme zone of the transaction that we also see here. And that kind of created a whole transaction in itself. Then it comes to that 15-minute zone. And now we're also looking at another 15-minute zone. There was another transaction here. I'm going to go ahead and zoom into it in just a second. But I'm also paying attention to this 15-minute zone that I kind of skeptical on as well. I feel like it's going to be a very aggressive move, to look for a short here, which this was actually another trade that I took. Now we're moving into Friday. I had 2 good trades on Thursday. That was perfect. It fit my entry model. Now, with that being said, so it taps into our 15-minute area, right? We have a transaction supply reacting, failing, right? As kind of marked out in this little circle here, if you haven't noticed by now. And then we have a supply forming here. That's beautiful, right? So technically that can be looked at as more of like a midpoint / extreme, since, it's so wide, it's kind of the general area. And now how I'm viewing it is, in this case, we can possibly ride it to that little 15-minute area. But how I'm also viewing it as well, look how bullish the market is. It's very aggressive, at least in my opinion. Yeah, we had a little, 2 candlesticks that were humongous to the downside. But I'm also seeing that, okay, we get these 15 minutes that's possibly creating demand order flow here. Let's not forget, there's also a little bit of a transaction here that kind of throws off my entire idea of taking a short here. And that's the thing about trading. You're slowly going to notice as you're getting down to your entry models that you will find different things here and there along the way when you're basically collecting data, right? To catch an entry, you're going to slowly find data that kind of contradicts what you're doing. Now, in this case, me, I still, I was still certain on, okay, I'm going to take this trade. And it is very aggressive. I mean, the stop loss in itself right there is a lot bigger than I would suggest doing for like at least the RR, right? And I said to myself, okay, I'm just going to go ahead and take this trade. And how I viewed it is I wanted to go for such a better RR, and before I even got the chance to move my, TP, cause like I didn't exactly put the TP where I wanted to put it. I kind of left it open. That's kind of what I was doing because I was just testing the data, seeing if the 15-minute zone had a aggressive reaction. And ideally it did. It had a very, very aggressive reaction here. And I took it as more of a BE, right? If you don't know what that means breaking even. That's kind of how I took this trade here. I took a straight break even here, which isn't a bad thing. I mean, you're not losing anything, but that makes you kind of think to yourself, okay, what did I miss here? Now, with that all being said, I noticed that, man, it created a ginormous transaction here with, this supply that I originally was taking a trade off of, is now had a double reaction and then it blew through it. So that tells me that, okay, maybe this 1 minute zone down here could be a possible entry port. Now, with that being said, we're still in the 15-minute. It created a transaction here. It's in the premium of this 15-minute zone. So how I'm viewing is this 1 minute may well be a possible, TP point. But I'm also looking at it as like, okay, this midpoint, we could take that. And I took it, but I also realized that it didn't really sweep liquidity or create inducement. So I feel like it's going to become the liquidity. So my ideal plan was, it had a reaction here and it created that transaction I was looking for. But like I always tell everybody, it creates an extreme and a midpoint. Okay, we have some liquidity that we're targeting, but it didn't sweep internal liquidity. So I'm going to go ahead and just take it to this little 1 minute demand. And it was a great 1 to 6. I mean, I'm just going to round off the numbers here. I'm not going to do 1 to 6 points. I'm not going to do that. So it was a 1 to 6. It was a really good trade. I was happy with it. Didn't last too long. And then, it reacts to it kind of like what I was suspecting was going to do. And, okay, maybe this midpoint, like how I was saying, is going to become the liquidity. So that's what you ultimately got to identify when you are entering the market. You got to identify what is current liquidity and what will become liquidity. I know that, what would become liquidity seems kind of hard. This whole thing is hard. It's not easy. It's simple, once you build and backtest and collect data. Now, here's where it got a little crazy. The stop loss, it was just wicking that extreme zone. It kind of worried me a little bit, but with this whole idea is, give yourself an extra pip, here and there, whatever you feel most comfortable doing, depending on which broker you have. That's truly up to you how you want to do it. And a lot of the time I always tell people, give yourself a little bit extra space, dependent on your broker, in terms of the spreads. I always say to do that just to stay on the safe side. But I highly believe that this extreme zone was going to be respected. And all in all, it genuinely was respected. And it did create kind of like some order flow, on multiple points. But going back at the end of the day, and then news kind of kicked in, it was going to support, the overall idea. And then it taps into that 1 minute zone. And genuinely, it does become bullish afterwards. And, it does go to the upside. And it was very aggressive afterwards. But it was a beautiful 1 to 9, right? So all in all, guys, just what exactly just happened here, right? My Thursday, I had 2 wins. Awesome. My Fridays is the only one that I'm going to, kind of put on an Excel sheet for you guys. But On Friday, we took 3 trades, right? We basically had, 2 out of the 3 trades were a win and one was a break even. It wasn't exactly a loss. Don't consider your break evens as a loss. Look at it as you're just managing the trade correctly. So you got to look at that as also kind of like a win for yourself. Maybe not for your pocket or your account, but at least on a psychological side, that is considered a win. And, I looked at this one I didn't ideally take a trade off of, but this fourth one here, I didn't take a really trade off of it. It's more of a kind of just, back testing a little bit. So here's a Excel sheet, right? I wish I probably would have pulled out my actual calculator, but I just wanted to keep it simple for everybody. How I'm looking at it is there's 3 shorts, 1 break even, 2 wins, 1 to 6 and a 1 to 9. So out of those 3 trades, that's 15 RR in total. Now, how we should all view it is, 1 to 15, 15 RR in total, like, that's amazing. But we also got to look at how much are you risking? Let's say you're funded a 100K account. Are you risking 1%? That 1% is equivalent to $1,000. Now, times that by 15. That's $15,000 in a day. Now, I always tell people, if you are 100% confident in the trade that 1%. Do it. But if you don't feel too comfortable in terms of, I'm not saying that, let's say it's just going against everything and, you just don't want to trade. No, not necessarily. Just even if it fits your entry model, but you just mentally don't feel that it's, the one, take a 0.5%. Do it. Or if you're counter trend trading, do 0.5%. Or if, let's say, that still happens, you don't feel okay with it, and then there's one confluence missing, well, turn that into a 0.25%. Do whatever it takes, to give yourself, whatever, because at the end of the day, you don't want to take a trade and then you're stuck checking it every 2 minutes. You don't want to be that. You don't want to be in that mindset. You don't want to be in that situation because you're going to drive yourself nuts. So I hope this is helpful. Check out our Discord link. And as always, guys, stay profitable.